Glad to have you back. Earlier in January 2022, the World Bank predicts that Nigeria will have one of the world's highest inflation rates, with the eighth highest in sub-Saharan Africa. In June 2023, World Report Nigeria Development Update, the bank predicts an increase in 2023 to 25% as a result of the withdrawal of gasoline subsidies. The Apex Bank explained that the removal of petrol subsidies is anticipated to cause a temporary increase in inflation in the upcoming months before contributing to disinflation in the medium term. On the show today is no other person than the Managing Director and Chief Business Officer with Optimus by AfriInvest, Mr. Ayodeji Ebo. Mr. Ebo, good afternoon and thank you so much for joining the program.
Yeah, good afternoon and thanks for having me.
Let's start up with the breaking news, the hot one from Aso Rock. The president has signed 4 executive orders to curb multiple taxation. This looks like a very good move, following all that has preceded this by the president in a month and few days. What is your reaction to this? What are the positives here?
Okay, thank you very much. And like you have said, it's a cheering news, given that businesses are really going through a lot at this time where subsidies have been removed, and the prices of an exchange rate impact on those companies are also impacting on cost of doing business. And beyond that, most of the taxes that have been suspended or reversed, for most of them, they also pass. There's that pass-through effect to the consumers. So you would see, like, for instance, the excise duty on telecoms, telecommunications, that the 5% that would have paid if you make calls and data, that's like 5% savings on what we all spend on calls, which invariably can be like a palliative, that you see that rather than paying it to the government is trying to at least give an extension so that that will reduce your cost of living, because we know a lot of people spend money on data, spend money on calls. Secondly, the excise duty that would have also doubled on items, alcohol, motor vehicle, custom duty, that would have paid more for as Nigerians. That would be like a savings to Nigerians and will reduce that impact that would have had if that has not been extended or that has not been suspended on Nigerians. So I see this as positive, but I feel that there is also still more to look at. You look at, for instance, some of the custom duties. We are not self-sufficient in producing cars. And when you look at the cost that is being added, when you, let's say you purchase a car for about $20,000, and by the time you're also trying to clear, you have to pay about $10,000. So it means that this money going to the government is also a burden on Nigeria. And we all know that there's still a lot that has to be done within that automobile space. If those funds are being channeled, whatever is being taxed has been channeled to improving that particular space, then we can say that maybe may have some form of impact and will be self-sufficient. So there's a need to review these taxes so that the burden, if we want to reduce our cost of living, impact on the inflation rate, some of these taxes may need to be reduced, given some of the sudden shock that we've seen from oil subsidy removal, as well as the exchange rate unification. We all know that, yes, the electricity subsidy that has been suspended, there's also like a tax of, I think, 10% or 7.5% on that. So some of those things, if that would also go up, government can also give a bit of tax holiday on electricity tariff rather than continue to subsidize, because when you charge tax and you are not charging the cost reflective tariff, and you now come back to subsidize that. So it's just a lot of complexities. And I feel that taxes can be used as the rebates or palliatives for Nigerians. While we increase the tax net, some of the new policies around signing with the Market Trade Association, those are which will increase the tax net at least significantly. And that will reduce, there will be need, there won't be need for government to continue to increase tax. So I feel overall that this really is positive, positive for the manufacturing industry, positive for businesses, also positive for Nigerians, because that savings, that effective savings that they would have rather than pay for these things would also help them increase demand or be channeled, that savings will be channeled to other things, which will increase purchasing power.
Very interesting one there, Mr. Ayo. Anyway, before I let you go, I'm also looking at the Finance Act, which the date of commencement has also been pushed forward. But that's not what I'm looking at, really. In your thoughts, what are the positive of the Finance Act to our budget and all of that? Are we really achieving what set out to achieve with that act?
Okay, thanks. I think yeah, it's achieving it, but it's coming with some burden. Because governments, when you look at the past administration, because of the constraint they are experiencing in other sources of revenue, the Finance Act are basically focused on how they can only increase revenue and not, that's increase revenue by taxing. You see a lot of taxes being introduced, which has been a burden because indirectly it means we are paying more. Some of these taxes are because when you look at the products that are being affected, for most of them, you're able to pass the charges to the consumer. It means Nigerians are paying more. And for most of the companies, there's a limit to which they can reduce their margin to absorb this. So I think that there needs to be a shift to how we can increase, let's say, the innovation around increasing the tax net to increase revenue rather than trying to just increase the amount to increase your revenue. So with what this new administration, the promise that they made to be able to reduce multiple taxes, and with one or two, if they are able to be ingenious in terms of increasing the tax net, I think that would be more positive and would also for most Nigerians will benefit us more than rather than the focus on just trying to increase revenue using the Finance Act to increase revenue using taxes.
Amos, thank you so much for helping us understand that move by presidency. Now, let's go back to our discussion before now. Inflation to hit 25%. It's scary, but do you think we are moving towards that direction?
Thank you very much. It's really staring at us in the eyes. We already know when you look at May inflation rate at 22.4%, it was after that's May 29 after the announcement that subsidy is gone that the fuel prices increased significantly, especially those in the southwest, from about 180, 190 to currently about 500 naira. So that's a massive jump. So, and when you look at the proportion of energy prices in the total food basket, things about 20-25%. So that would also have its impact significantly. Even cost of food, because transportation cost would also impact on the cost of items. So it's not coming as a surprise. The 25% to me is even very conservative, given the price changes that we have seen. Yes, for the unification of the FX, we don't expect a major movement because for most of the importers have not been getting dollars at the CBN rates before. Most people have been getting at the 750 rate before the unification. So we don't expect, so the movement we have seen now currently at 774 will be about 5%. So we don't expect that to have a major impact on inflation rates. But the transportation cost would have that impact. For June inflation rates, we feel that it should cross 25%. But it's now dependent, what we're looking forward, depending on policy options or policy decisions of this new administration that will determine whether we will begin to see a moderation. So if we recall, even for the fuel subsidy or the current fuel price at around 500 naira, based on the NMPC numbers, the conversion rate was at 640. Given the current I&E window, maybe at 750, 770, It means that once the new independent petrol importers start importing, that is the rate at which they'll be buying dollars. So it means that the fuel prices will also inch higher from this current level. That would also have that impact. So, but what we should now expect is if there are policies around like food inflation, which is about 50% of the basket, taking care of we can take care of insecurity so that we have more planting this season, at least given the challenges we have experienced in the last 4 or 5 years. If we can have more planting, that will improve harvest, cost of food would also will come lower or stabilize. And as such, would expect to see moderation in food prices. I don't see any business if we can also accelerate uh, the rail system such that we don't need to be moving food using trailers from the north to the south. That is really very expensive. These are some of the things that requires urgency that will bring down inflation as we progress. But I to wrap up on your question, the 25% to me is also very conservative and is not coming as a surprise, given some of the actions that we've seen in the last few weeks.
Another worry of analysts and those in the monetary space is the fact that this would help government, that subsidy removal and getting more funds would help government reduce dependence on the central bank for funding and, of course, limit money supply growth. Do you agree to this sentiment?
Yes, truly it will reduce um, government dependence on funding. So two things have happened now. When you look at the conversion rate, the revenue for part allocation used to be converted at 460. That's the NAFEX window. Now will be converted at the current NAFEX window of 750. That's about 35 to 40% increase in revenue. Let's assume the dollar revenue remains at the same level, naira revenue to be shared across the three tiers of government would increase. Um, and secondly, there's also when you say NNPC has been removing subsidy as under recovery from that revenue before it's shared. So now, with the removal of subsidy, it means they will have more to be able to be distributed across the three tiers of government. So that will reduce the need to borrow or depend significantly on the CBN. But that's within the CBN angle. Nigerians will be, how does it now affect them as Nigeria? The removal, what would benefit us is that effective savings or that increase in revenue should be channeled into critical infrastructure to provide confidence. Like when you travel across by road Nigeria, you see, oh, Sukuk 1, Sukuk 2, Sukuk 3. That's a bond that was issued to build roads. So I feel that it will provide credibility if government can come up with like a fund, that savings fund, subsidy savings fund, that is channeled into these critical areas that will provide a bit of confidence that even if Nigeria is being pained and we are paying a lot for fuel, we would be able to see some of those, the roads, the rail system, the buses that have been purchased to reduce that impact. So that is what I feel the focus of this administration, part of their focus should be.
Interesting. Before we leave that, let's also talk about cooling off of inflation. The write-up also says that by 2014, we will start to ease off this level of high inflation. How possible is that? I'm also thinking, because some still say there's a transition period and we'll get to a point where inflation will go to the other side and later comes back. But do you think first quarter 2024, things will return back to normal?
Okay, thanks. Based on their assumptions and how inflation is calculated, it's calculated on a year-on-year basis. So the first thing is that we know that what we call a base effect. That means because we have higher figure in this year, when we are comparing inflation rate next year, it will be lower because of the base effect, the calculation. That's theoretical. Secondly, it's also going to be based on the policy moves. So, for instance, the unification of the FX. If CBN does not clear backlog, if CBN does not supply, and there are no policies that provide confidence for foreign portfolio investors to come in so that we can have enough access to FX liquidity, remittances coming in, then that this policy would mean that we would see significant depreciation and gap within the parallel market, which would also now impact on prices. So there's a need to also support. So it's what that's deceleration or the deceleration of the inflation rate that we expect to see will be based on the move that we see even from now beyond these bold moves that have been made within the last 1 month by this current administration.
Mm. Well, let's now talk about stocks roundup. And we see that investors traded 41.5 billion naira shares in 3 days. First, I want to ask you, what is your overview of the performance of the market in recent times?
Okay, thank you. I think as a broker, we're excited within the stock market community, given the activities that we're seeing. A lot of investors that have abandoned the market are now also coming back to partake from the bull run in the market. And one interesting thing that we need to note is it has also added to the net worth of Nigeria. So if we see the market capitalization increase by close to about 5 trillion, it means that Nigerians are now worth more compared to what they were worth, their net worth last month. So that they have also been empowered to be able to increase. So imagine someone that have gained maybe 100% increase, invested 100 million and is getting 100 million now in some of those banking stock, good companies. It has increased the capacity of the person to also spend more and will spur demand. This is what happens when you have the right policies. But there's a caveat. We hope that this is sustained in terms of providing confidence, because what we are seeing is that investors are buying in anticipation of major entry from the foreign portfolio investors and the PFAs. But portfolio investors will not come if we don't sustain, if there's no confidence around the FX management, if the backlogs are not cleared and supply is not improved. So most of these gains can easily be reversed if it's not sustained. And what would just encourage this current administration is to see how, or the CBN providing that confidence would attract significant inflow into the market. And that would even help, even as Nigerians, because for those that have been participating in the market, are currently in the market, their net worth or the value of what they have has increased, which also increase their capacity to spend. And as they try to spend more, that would increase the demand for goods. And you see the value chain, people will need to produce more. And as a result, productivity overall would also increase.
Well, let's now look at top 3 NGX performing sectors. This is very significant. Let's talk about financial services, conglomerates, consumer goods. They are the top performing sectors in the market. What, in your thoughts, is responsible for this performance?
Okay, thanks. I think the first thing that we need to note is that it's affecting the current sentiment is that everyone buying with the aspiration that foreign investors will begin to, we've seen them, we increase their stake significantly in the market. So this is like early bird positioning. And we've also been seeing their participation, which has been driving prices up. So we all knew that fundamentally, most of these stocks were strong, but because of the negative sentiment in the market, their prices, they were trading at significant discounts. So we still believe that what we are seeing is because of the discount rate at which they are trading, that investors are buying into them. The conglomerate, the consumer goods, these are companies that we know that they demand, there are always demand for their goods, and most of them, the demand is inelastic. That means people can't do with what they do without what they sell. So investors are also taking advantage of this. But I would also like to sound like a caution based on that for those that are in the market, they shouldn't also be carried away. Always have your plan when you are investing, your target exit price for you when you are investing, such that whatever happens after now, some of the gains that you think you have, we call it paper profit until you sell, until you crystallize, until you sell those shares before you can hold on to whatever gains that you have. So it's that would also be very important. And for those coming in now, also have a long-term perspective about the market. Stocks are for long-term, but if you see gains that you see it's very significant, take your profits gradually so that it's not eroded, perhaps any policy change.
Finally, do you think the market will sustain this following all of the policies that we've seen that, of course, one way or the other will affect trading and investors' confidence? What is your projected outlook for in the next quarter?
Okay, thanks. The market, I would say, is depending on whatever policies that the CBN and the Monetary and Fiscal Authority take. It's not market will react to those actions. So we believe that what I would say is that if they sustain this positive action, providing confidence, we believe that it is possible for this market to sustain this current form.
Well, it's a good way to leave it. And I must thank you so much for your time, Chief Business Officer and Managing Director, Optimus Buy Free Invest, Mr. Ayodeji Ebo. Do enjoy the rest of your day and have a productive day.